please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
You're with us here on a fresh new edition of Trading Hour. I'm Prashant Nair. With me, my colleague Ekta Batra. The markets are up and about 85 points, and what a way to close the week out. If indeed by 3:30 we end with these 80 odd points or so, absolutely amazing, stunning. I mean, no other words to put it. And by the way, this comes on the back of a strengthening dollar. I mean, the consensus seems to be now building that the dollar is actually going way higher. You know, in the face of that, for the market to do what it is doing, I think is quite remarkable. This 80-odd point move today would also mean that for the week, which is Friday to Friday, we'd sort of, put out a small gain, 0.5% or so, if we end with this 80-point gain. Otherwise, it would have been down, especially after yesterday's 90-odd point sell-off that we saw on the Nifty. There's lots to talk about, individual stocks, Kotak, Indiabulls, housing, etc., and we'll get to that in just a bit. But let me welcome in my colleague, Ekta. Morning, Ekta.
Hi, Prashant. Well, I just want to take that point forward about, how we've done week to date. In fact, the Nifty, like you mentioned, is up around 0.4%, but the Sensex is up around 0.2%. What stands out is the outperformance of the mid-cap. So I think that would help in terms of a little bit of sentiment and assuage, maybe a little bit of concerns on stocks. So the mid-cap index up around 1.7% week to date. Nifty Bank underperformed, and we have outperformed as a market as compared to the MSCI Asia ex Japan, which is down 2.4% at current reckoning on a week-to-date basis. So that's a little bit of a silver lining coming in. Separately, a lot of stocks in focus. Indiabulls Housing Finance, just look at that stock go on the back of numbers. Kotak, as we all have been talking about, something like a Torrent Pharma, which is reacting to its numbers, and even PVR, which has renewed its tie-up with Book My Show. So that stock too is higher in today's trade. Separately, Reliance Communication, which we'll be discussing through the course of the show as well. Mitessh Thakkar joins in to discuss the technicals of the market now. Mitessh, hi, over to you then. What are you recommending in terms of stocks, and are you enthused by the move that we've seen in the markets this week?
I think very much. Clearly, yesterday was some kind of a mild breakdown on the intraday charts. Fortunately, that's been reversed. So in that sense, it's very, very positive. I think if we sustain, I think Prashant was also highlighting that, then I think there's a good chance that we might scale to new highs early next week and then continue the momentum on the upside. Also, there's some option unwinding happening at the higher level, so I think that gives me hope that this move might sustain, but we'll take it, have a look at it around the closing bell time. The stocks which I recommend right now, two buy calls. Siemens is breaking out, so buy with a stop at 999. Look for targets of 1050, and Coal India is a buy as well. Keep a stop at 273.5. Look for a 286, 288 kind of a first target.
Okay, we got some questions on Twitter coming in. So we've got Ramakrishna, who's got 500 shares of Oil India. Cost is 216 rupees each. Wants to know the way forward. Mitessh, what would you tell him?
That's Coal India, right?
Oil India. Oil India,
Oil
yes.
India, sorry.
Oil India.
Yeah. So I think, the stock has a lot of base building around this 205, 206 mark. It's not something which I would call as an investment buy, but I think from a trading point of view, keep a stop below 204. And I think this entire consolidation could lead to an up move to about levels of 240, 245. That should be your exit point.
Okay. Mitessh, I wanted your thoughts on Torrent Pharma and how it's looking on the charts, because it's one of the few companies in the pharmaceutical space which has given significant returns year to date. It's up 18%. What would you tell in terms of, say, an intraday medium-term strategy for that stock?
So, two things, Ekta. One, disclaimer that I've just booked profits in Torrent Pharma on a personal position. I think 1640, 1650 is the level where the stock gets mild supply. But I think, once these levels are crossed, I'm looking at a target of 2000 at least on the lower side on this stock. I think the long-term charts are extremely good. Once we start getting past 1650 levels on the upside, I think you should see a lot of momentum come back into it. In fact, I think the movement has started today, but maybe around 1650 it might take a breather for next few days. But I think once it crosses that, I think 2000 should be a position target for somebody who's looking at about 3 to 4 months kind of horizon.
Okay, Chris Subramaniam is joining in as well. He's co-head equity advisory with Altamount Capital. Chris, thanks very much. Good morning. What would you be trading? What would your Nifty and stock views be?
Yeah, morning, Prashant. I'm not too sure about the direction of the Nifty, though broadly it's looking on a very bullish trend. But so keeping that in mind, recommending a selling of a strangle in Nifty, one could possibly sell a 11,500 strike call and a 10,200 strike put. The total the premium inflow is about 130 pips. Keeping a target of 70, and maybe one could keep a stop loss of 165. And stock-specific couple of covered calls. Stocks which have not exactly performed so far, but I think very near to the support, and odds are high that they will go up. The first one is Hindalco, wherein recommending a covered call. One could buy the August features, sell a 220 strike call, keep a target of 224, stop loss, keep a stop loss of 210. Second one is a Tata covered call in Tata Global. This again post the results, saw some pretty sharp cuts, but I think closer to levels of 225, 230 has a decent support. So one could possibly buy the features, August features, and also sell a 250 strike call. Recommending the target of 250, and one could possibly keep a stop loss of 230.
Okay, all right, Krish, we're gonna leave it on that note. Thanks very much for joining in and talking to us. So that's the view coming in on the F&O space. But a lot of the aviation stocks have been in focus, especially after Indigo's numbers, which disappointed. But it's not only Interglobe. India's second largest carrier, Jet Airways, is working on an immediate turnaround plan to save costs to keep the airline afloat. Utkarsh Chaturvedi joins in with all of the exclusive details that he's picking up. Utkarsh, apart from exploring the option of salary cuts and possible layoffs, which we have been hearing of, what are the options that the airline is now looking at in the near term?
So in fact, we spoke to very senior sources in the company. In fact, they're saying that the whole 60-day deadline is too soon for them to be really wiped out. But what they're saying is that the company is really working on a host of measures internally also to really keep the airline afloat and get back to profitability. And the first one will be the sale and lease back of planes. Remember that Jet Airways at this point of time has around 16 wide-body planes which are owned by Jet Airways themselves. What the company will look at is selling them, and the sale and leaseback plan that will give them enough breathing space and enough working capital to survive for long. Secondly, the company is talking to all the vendors at this point of time. So vendors across board, whether it be the maintenance contracts, whether it be any other contracts, the company is really looking to renegotiate all the contracts in lieu of the financial stress they have. Also, cutting loss-making routes. Now, this is something which the company has been saying for a long time, but this time it is happening more aggressively. What we are picking up is that the company has already grounded the 2 to 3 ATRs because they were working on loss-making routes. So this is the third one. And fourth one is the early release of planes. What does that mean? That if your lease is getting expired, say in the next 1 to 2 years, the company will release the planes before the whole lease gets expired, so that they get that 1 to 2 years of breathing space. Also, the company is expecting the 737 Mitessh to come as soon as possible, because once that happens, what will happen is that they will get a 15 to 20% additional fuel efficiency. So these are the internal plans, apart from, as you said, speaking about salary cuts and some layoffs in Jet Airways.
Okay, Utkarsh, thank you very much. It's a turnaround, but also this is back to the wall kind of measures which Utkarsh is detailing have got to be done now. Sonia is also standing by with more background as far as the financial stress of the company, and also a little bit about reports suggesting that Mr. Goyal, Naresh Goyal, may be looking to offload some stake, get in some money. Sonia, why don't you take us through that?
Well, that is the need of the hour, right? Money for Jet Airways. And reports do indicate that Naresh Goyal may be looking to offload some of the promoter stake. Remember, he has 51% stake. They are in talks with some bankers as well. I understand also from some sources that perhaps Delta Airlines may be looking at buying some amount of stake. Of course, these are all unconfirmed rumors. But nevertheless, there is definitely strain on the balance sheet. And it's not new. The stock has been under pressure for a while. It's down about 40% this year. That's because of the way the balance sheet and the financials have been eroding. If you look at FY18, it delivered a loss of 634 crores. The auditors once again in FY18 raised concerns with respect to the ability of the company to meet its financial obligations. The net debt of the company has risen almost 224 crores quarter on quarter. As on today, it stands at 8,150 odd crores. And the management in its earlier conference call did indicate that yields have been under pressure and pricing will definitely go down further for the sector on the whole, and in pockets like the Gulf, etc., they are facing a big strain. So I guess, it was a long time coming, the kind of cost pressures that they are facing, the fact that they have to slash employee salaries, etc. This was expected by the street, and that's why you're seeing all of that being priced into the stock as well. However, on the reports of Naresh Goyal looking to offload some stake, CNBC TV18 has not independently verified this.
Okay, fair enough. But Sonia, there is an industry issue which is emerging, right? I mean, that was very obvious because Interglobe is the lowest airline in terms of a cost structure, and they reported an EBITDA loss this time round. So there is an industry problem which is emerging, and it's probably not just going to be limited to Jet and Interglobe anymore.
Oh, absolutely, Ekta. When Interglobe's numbers came out last week, we had indicated that Interglobe, having the lowest cost structure, is sitting on an EBITDA loss. So the expectation is that Jet and SpiceJet will also go down that route. The only thing is, for a company like Jet, it's already sitting on such high interest costs which have eroded its profitability that, it is a case-specific issue. SpiceJet doesn't have that much of a high debt. It's Jet Airways with its huge debt that's really the interest cost, cutting down on its profitability. That's the reason why. I mean, there are some reports indicating that Jet has informed employees that they have enough money only to run for another 60 days, and that's why they're slashing costs, etc. I won't be surprised if those reports are actually accurate, because we have seen them drain their balance sheet quite a bit over the past many quarters.
All right, Sonia, thanks very much. Appreciate you joining in with all those details. One way to look at Ekta is what you said, which is that this is an industry issue. The other is actually the flip side of it. This is a business where there are only 2 or 3 big players, right? So if one large player gets into trouble, it could actually be good news for the other player, a player like Indigo. I remember I was listening to the conference call, and there were analysts who were asking Interglobe management whether other airlines, etc., are going to, cut capacity. Which essentially may lead to tariffs across the board rising, and they were pretty non-committal about it. But news of trouble at Jet actually might lead to that eventually. That Jet, doesn't decide to sort of drop unprofitable routes and stuff like that, and it might lift what you pay per seat. So let's keep a close eye on this one. But this is an important story that we are tracking. We will take a very quick break here, and we will come back in just a bit with more on markets. We also caught up with Ashwini Agarwal, co-founder and partner of Ashmore Investment Management India, who says that he's very excited about the Indian market, sees more opportunities here. Listen and take that break, be right back.
This market is giving you a lot of opportunities from a stock picking perspective, because there are lots of stocks that are down, earnings are coming through, valuations are reasonable. And of course, there are some global risks on the horizon. There is politics in India, and you have to deal with all of that. But on the whole, I feel quite excited. I find more opportunities today than I was finding, say 6 months ago or 7 months ago. So I think that, one shouldn't get fazed by the all-time high of the index, and one should focus a lot more on individual stocks and where the opportunities lie. Nifty, we expect an earnings growth which is a little over 20% for the current financial year. Next year is still, of course, a little bit further away, but if you pencil in estimates that sound reasonable, you should still get to about 18 to 20% next year as well. A big driver of the earnings this year is going to be the industrial banks, where we are seeing stabilization of slippages in some of the large industrial banks, and hopefully the provisioning requirement will start to fall off significantly as we head into Q3 and Q4 of this year. Even in healthcare, the earnings are starting to bottom out. You might see another quarter or two of pain for 1 or 2 companies which have large molecules that go off exclusivity. But I think on the whole, for the sector, you should start to see significant earnings growth.
Welcome back. Well, steady as she goes for the mid-cap index, up around 1%. Bank Nifty also doing well, so a pullback coming in for the Bank Nifty. Taj GVK numbers on your screen. Revenue is up around 22% to 73 odd crores. The operational performance should come up for you as well. Some news with regards to Nirav Modi as well. The extradition request has been sent to the UK for Nirav Modi. So there's an update coming in. We'll probably try and get somebody from CNN News 18 to update us on that. But let's focus back on specific stocks then. Indiabulls Housing Finance is the one which has really taken top honors from the Nifty space today. It has reported what is a 30% plus loan growth, 30% plus profit growth this time, and NII, I'm sure, is in double digits as well. Abhishek is here to tell us more about it. Abhishek, you know, it's been quarter after quarter, irrespective of the industry, that they've been outperforming. What are the numbers this time round?
Irrespective of cycles also, for 7 quarters in a row, they have reported an AUM growth of above 30%. So the picture is as perfect as the management always calls it. They have been guiding of loan growth about 30%. It has come in at 33.4%. They have been saying that the spread will be between 320 to 325. It has come in at 323 basis points. They have always maintained their gross NPA below 1%. It has come in at 0.78 versus 0.77%. One niggling worry in the result is that the incremental spreads are coming down. So incremental spreads have declined from as high as 3% to about 42 basis points. So that is a niggling worry, just one small factor. Otherwise, NII growth of 32% plus, net profit growth of 34% plus has been taken well by the street. Let's hear it out from the management as to the guidance ahead.
There are significant tailwinds both from a macro as well as a micro, and I'm reasonably confident that the margin would stay in our guided range of 300 to 325. Over the next couple of quarters, I expect it to stay at the higher end of the range, and the book would continue to compound at north of 30%. The one very interesting trend, both as an outcome of not only RERA but also GST, is that there is a tremendous concentration which is happening in the construction finance space. Land owners, which had traditionally over the last decade or so tried to become developers, are now going back to being landowners. So there are reasonably good proposals which are coming through from extremely large developers who are not now required to put capital into land and can therefore quickly start up a project, and we can give them construction finance.
Okay, another fantastic set of results from Indiabulls Housing. The other financial stock in focus is Kotak Mahindra Bank, which has issued non-convertible, perpetual, non-cumulative preference shares. That's a mouthful, worth 500 crores. This is likely to have been done to meet RBI's mandate of lowering promoter stake to 20% by December of 2018. So they've already done it. We spoke with the management earlier this morning. Let's listen in to what they had to say on this matter. Remember, the question which people are asking is whether this will fly by with the RBI, it'll sit right with the RBI or not. So let's listen in first to the RBI, to the Kotak management, and then we'll play out you know, a securities lawyer's view on the same. Let's listen in.
This is perpetual preference shares, so it has it's not something which a shareholder can ask for a repayment back. So to that extent, it is perpetual. It is something which is part of Basel III and RBI guidelines, forming part of Tier 1 capital. And to that extent, it is part of Tier 1 and will count for every purpose as capital. The requirement for us was to make it as part of paid-up capital, to bring down promoter holding, as was always for us as part of paid-up capital. And to that extent, this kind of the holding is now shade below the 20% requirement for part of paid-up capital. This transaction has just closed last night. And to that extent, we have intimated to the RBI just after the transaction has happened. The preference shares which have been issued are non-convertible, so they won't affect the equity dilution, equity shareholder as such. Voting rights in any case in a bank are, again, as per the Banking Regulation Act, are capped. And the number is something which the Act requires RBI to set up. The current stipulation on that is there's a cap of 15%. So in any case, voting rights of a shareholder in any bank in the country is capped at 15%. So that does not change.
Preference shares are kind of somewhere between equity and debt in terms of both accounting standards and in terms of first principles. Now, this happens to be not a regular preference share, but a perpetual preference share, so it will never be redeemed. So it seems to be much closer to equity. If the votes are not going down, then RBI may have an issue with it, because I think the issue is not with respect to increasing net worth, which these would qualify for, but with respect to change of control. So I don't know if RBI will have a view on this. There are two separate things. One could be increasing net worth, which doesn't seem to be the intention of RBI. Yeah. RBI is more primarily looking at reduction of control of the promoters. If that is the intention, then this would not bring down the control of either the promoter or the other shareholders. So RBI may have a view on it, but again, if they've done this, I'm sure they've already spoken to RBI and taken their go-ahead.
Okay, so that's the opinion coming in on Kotak Mahindra Bank. That stock up around 1% but is off the day's high for today's trade. We'll take a break. But up next, we're going to get you previews of earnings which are due today, especially from the consumption space. So we have Titan, Nestle, Berger Paints. We'll get you an update on all of those.
Okay, so the market's still going strong, although down about 10 points or so from when we started at 11, but nothing to really complain about. And this is almost a full recovery from yesterday's cut. And as we were discussing right on the top of the show, this would mean about a 0.5% odd gain for the week, Friday to Friday. Earnings continue, and today it's the turn of companies like Titan, Nestle and Berger Paints, which will report first quarter results. Mangalam is here with key expectations for these key companies. Mangalam, morning.
Morning, Prashant. For Titan, I'll move away from the script. It's not at a record high ahead of numbers, unlike the other FMCG companies. That's primarily also because, Titan had given its quarterly update earlier, and they said that the jewelry demand will see muted growth on account of a couple of things. The first one is that it's a high base, because in the relevant quarter last year, it was a growth of 54%. Secondly, there haven't been enough wedding dates, as well as demand situation has been muted in the first quarter itself. So revenue growth of 10% is on the cards, led by 8 to 10% growth in the jewelry segment. Margins, however, likely to expand. That expansion phase is likely to continue. So we are expecting 100 basis points improvement on the margins, as well as a net profit growth of close to 20% is what is expected. Eyewear and jewelry, eyewear and watches is something that we'll be watching out for. But jewelry is what accounts for majority of their revenues and earnings.
Okay, so that's on Titan. But what about Nestle? What's the volume growth you're expecting there?
Nestle doesn't really give volume growth. So double-digit volume growth is on the cards on account of a lot of things. The first one is the Maggi salience, that one picking up. Secondly, they've launched a lot of new products. And like all the other FMCG companies, Nestle too is at a record high, trades at a premium to the sector 54 times. So that would aid top-line growth. For Nestle this quarter, however, the important point will be the margins, because most of their input costs, the likes of wheat, milk, as well as sugar, they've been lower. Previous quarter, we saw a sharp expansion in the gross margins, and that is something that is in order for this quarter too. On the back of a margin expansion of excess of around 350 basis points, we will see a net profit growth of 45%.
Mangalam, Berger Paints.
Berger Paints double-digit volume growth expected. The management had told us 13 to 14% is on the cards. However, the street estimates are a little more conservative. They're expecting about 12 to 13% in terms of top-line growth, and that in terms of volume growth, that would mean a top-line growth of 16%, because paint companies have taken a price hike of around 3 to 4%. The EBITDA growth will be led by a couple of things. One, volume growth. Secondly, the price hike that they've taken, though there might be some pressure on the gross margins. Management commentary with regards to competition and demand recovery, along with the input cost environment, is something which is very important.
Okay, it's a busy day.
Busy day.
All days are busy, right?
Yeah, but this one is busier, let's put it that way.
Okay, all right. So that's three companies from Mangalam's research universe, which will report numbers, and Mangalam will be back to analyze each one. We slip into a very quick break. We will return. We discuss market technicals as always. Ashwini Gujral on the top of 11:30. That conversation comes right up.